Hello, welcome to this week's Investment Trends, where we discuss the latest news in the stock market and the economy. So far this week, unfortunately, it looks like all three major stock indexes are headed for a weekly decline. This would be 5 out of the past 6 weeks we have seen all three major indexes down for that trading week. What has driven the market volatility this week has been the news from President Donald Trump that he will be imposing a 25% tariff on all autos that are manufactured outside of the United States. So this could drastically impact companies like BMW, Volvo that manufacture their cars outside of the US. This caused a lot of volatility in the stock market to continue from what we've seen so far this year. Other news, Vanguard released their market perspectives this week, and they believe, unfortunately, that they could see inflation continue to increase. And Friday's inflation reading that we saw, the personal consumption index, reported that inflation did creep up to about 2.7%. This was a 0.4% increase from the month prior, and this was also above expectations. So that news, as well as some of the news around tariffs this week, caused the market on Friday to react pretty negatively, with the NASDAQ being down, the majority of the losses coming in the NASDAQ, as that is down about 1.9% on the week. The S&P 500 is down about 1.1% on the week, and the Dow is down about half a percentage point. In looking at the 11 stock market sectors so far this year, the good news is that only 4 of them are negative for the year. And one of the worst performing sectors this year has been technology. So the technology sector is down about 10.7% this year. And this has been kind of the bellwether sector for the past 2 or 3 years in the stock market. So what you may see is, if we're looking at a 10% decrease so far this year in the technology sector, could be a good time, if you missed out on some of those gains, could be a good time to look to reallocate or rebalance and add some exposure to these technology names. Also, in other news, something to be aware of that we saw last week, the Federal Reserve chose to keep interest rates where they are at. This could impact, obviously, short-term borrowing. But the good news is so far on the year, the 10-year Treasury yield has been down. A couple places to look in the stock market that have remained steady so far this year have been energy and financials. So both of those sectors are continue to stay stable and remain positive on the year. And a lot of people lead to, at least with the financial sector, the lowering of regulations from the Trump administration, the deregulation that's taking effect could lead to more deals and less regulations on banks. In an interview that the Treasury Secretary Scott Bessent held on the All In podcast, he had mentioned getting together with a lot of community banks and trying to make their job easier and a lot of their lending requirements easier as well. They believe that some of these small community banks that may only have a couple $100 million in deposits on down should not have the same rules as some of these mega banks have, like the Bank of America or the JP Morgan Chase Bank. So something to keep an eye on, again, would be the financial sector. Also keeping an eye on mortgage rates and what might be impacted through that when we see these drops in the 10-year Treasury. With springtime coming around, it's a popular time for the housing market. So if you're looking at potentially buying a home, potentially moving, make sure you check and see what those rates could be, and you could be pleasantly surprised. So that's what I've got for this week. If you're seeing any other activity in the market, please leave a comment below.